Hi, everybody. Thank you so much for registering today. Top of the hour here, so I'm just waiting for a few more people to come in. I see that you guys are coming in. Are you able to see my screen okay? And Sam, I'm really excited for all of us to have Sam West from, I hope I'm saying your last name wrong,
You
right.
are, no
Yeah,
worries.
okay, I
You're
just thought
good.
about that while I said that. But Sam, he is VP of Talcott, and we are so excited with their brand new launch that they've done. They've already been doing really amazing things within the industry. They've been around for decades, so there's a ton of experience, a wealth of knowledge on this webinar. So I really am very thankful to have you on here. And my name is Kat. I'm an Annuity Sales Director here. If you guys are with IAMS already, we may have already spoken. But if not, and if you're new to IAMS, what we like to do before we jump into the presentation is give you some housekeeping of who we are as a company, as an IMO, and give you the benefits, the values of IAMS. So I'll go ahead and jump into that really quick here, about 5-10 minutes, and then I will pass this over to you, Sam.
Sounds good.
And so just as we're getting started, if you are new to IAMS, we have our new producer builders. And so this starts off on your very first day of getting contracted with IAMS. I've seen people submit cases within that same very first day, within the 24 hours. Of course, as long as you're contracted, or if you're working with a just-in-time carrier. But we start off at the $100,000 level, and you start getting different incentives, and you have 180 days. So like I said, the sooner you start submitting business, the sooner you can start going up the levels. And so at the $100,000 level, we do have different mailers, iPad incentives, $750 cash. And I don't want you to be limited by what you see here. Most of the agents that we talk to are already seasoned, already have marketing that they're working with. And so you usually already have different marketing that you come along with. So I don't want you to be limited by what you see on the screen. I just want you to know that you do have incentives starting off at the $100,000 level. And then the next tiers climb up to $250,000, $500,000, $750,000, and all the way up to $1 million. So this is a really exciting feature that we have. It's called our new producer builder. And like I said, do not be limited. I know you guys come with a bunch of different marketing you already do, because we need to be talking to people. That's the biggest thing that I hear agents telling me all the time. I need to get in front of people. And so don't be limited by what you see here. We have several different incentives starting day one. And then we have other IAMS business builders. So once your 180 days pass, you actually graduate to our marketing reimbursement that we do in our referred producer program. So on our referred producer program, you do have $50 every time you refer an agent to us. So that's really nice. Some of my agents make some good money on this on a quarterly basis. We pay this out on a quarterly basis, and this is a huge thank you from the company, from Steve and Charles, our owner and our CEO, to sign out a check saying thank you for sending this agent our way, that you get a $50 bonus. And every time that they write a piece of business on fixed indexed annuity, single premium life, MIGAs, life target premium, you're getting a percentage. And just to be clear, that is not a percentage or an override from the business that they're writing. It really is coming from IAMS as a big thank you. And we also, like I had mentioned a second ago, have marketing reimbursement. Now, this is huge. So for every $100,000 that you're writing in indexed premium, we do give you $100 back to go into your marketing fund. Off of in life insurance, we do this as well. So on life target premium, for every $10,000 of life target you're doing, you get an extra $200. And off of single premium life, for every $100,000 you're getting $200 back. We also have great back office support. We've been around for nearly 40 years now and have never had voicemail. We always pick up the phone. It's always live assistance, and we have several departments here, starting from the creative department that is in-house. They all come into the office still. They're not third party, and that's something I think we're really privileged to have. But we also have our new business department, and they're really the ones that help you get these cases across the finish line. I don't know what we would do without them. I don't know what we would do without our Firelight staff. And of course, you have us, the marketers, the sales directors. So we've got very good experienced sales directors on the life insurance and on the annuity side. So like I said, every time you call in, you get someone on the phone directly. And that's nice. It's nice to not have a waiting time, to not have to be on hold, but also we do have lots of other business tools like our website. So on our website, you have everything all in one portal. So you can even submit your cases on the IAMS Inc. website. So it's just IAMSinc.com. You get registered and you get registered for Firelight. I know a lot of you guys are already using Firelight, but we have Luma Firelight, which is attached to our portal. So you can genuinely do everything from one place on IAMSinc.com. You also have Annuity Rate Watch that we give to our agents for free. On Annuity Rate Watch, you have great income coder tools where you'll see Talcott actually come up #1 in immediate income. And then these are the EAP solutions that we have: Luma Firelight, iPipeline, Sunfire. Well, Sunfire not as much. We're pretty much using Luma Firelight, but that is available there all in one place. And if you need help getting set up, if you need help getting registered, if you just need help even with your application, I mean, we could log in there with you and do it with you. And that has been a huge game changer for a lot of agents. And like I said a second ago, too, we do have great creative services within our creative department. Now, most people, most other places, you've got to get this farmed out or you got to do it on your own. A lot of agents I talk to even hire professionals to do this. The problem with that is they're not working the insurance industry a lot of the time. And so they don't know some of the compliance things. They don't know what clients are looking for. And so it is a huge advantage to have our creative department that are working insurance day in, day out, Monday through Friday. They come into the office. If there's something that you're needing, I can quickly get a hold of any one of them, and they're really, really helpful. And we did also bring on a marketing implementation specialist. So he'll help you with lead flow. He'll help you in understanding brand recognition and just a lot of different things to connect the pieces to these different agency solutions, digital solutions, and turnkey options that we really are trying to capitalize on within this year. Because the more people you talk to, of course, the more opportunity. And something that I learned from the very first day I started working in insurance is one case, one person can change your whole practice. So you want to get in front of that right person. And so if you are having trouble with your marketing, we've actually designed out a complimentary marketing analysis. And so as you guys know, marketing is always a difficult hurdle to get through. And so the marketing analysis is completely customized for you. It's Marketing is not a one size fits all. Everybody's different. Some people like doing seminars. Some people hate doing seminars. So we take all of these things into consideration. We do a quick sweep of everything that you currently have on social media, your website, and we just put together different recommendations. Now, you don't have to follow this like it's the Bible, but a lot of people are able to take at least 1, 2, 3 things from this 25-page plan that we put together, and we really take the time to do it. It's a two-piece process. The first call, we're asking you lots of different questions. The second call, we come back with a 20+ page plan for you to really just expand on. So that's great. A lot of people are doing this right now at the beginning of the year. A lot of people did it last year at the end of the year because they wanted to get in front of 2026, but it's never too late. I think it's good to talk about your marketing on a quarterly basis and get that set up. So definitely give us a call if you are looking into marketing right now. And we do have our IAMS Wealth Management team. Our IAMS Wealth Management team, they are right down the road. It's really awesome. And what they do is they help you increase revenue, improve client retention, and then strengthen relationships, all from the security side of the business. So everything that we do here in this building, this is all insurance related. So we're doing FIAs, we're doing life insurance, we're doing MIGAs. But here on the wealth management side, if you're already a registered securities license rep, this is the place for you. We've seen so many people have massive success once they've talked to Duncan and learned about their system and how they do things. And it's incredible what they do. They're not only some of the sharpest people I've met, but they're actually very kind, very humble. And those are the type of people that win over these strong clients. And so we do a lot of work with them as well. And we have our Life and Annuity Academy that we do maybe 3, 4 times a year. Right now, actually, it's raining. It's pretty crazy out here right now. But we don't have any kind of in-person events during the winter time. So our first one will probably kick off maybe in April, springtime, whenever it starts getting nice. And so our Life Annuity Academy, we have multi-million dollar keynote speakers here live and in person for 3 days. It's just continuous learning, but you also get to network with some other life and annuity agents and some advisors. It's really good because it can be really lonely. And so this is some of the only time that I ever get to meet any of my agents. And it's a $2 million qualification to get into the academy because all of these strategies that we have within these 3-day events are just game changing. So if you haven't been to one, I highly suggest you come to one. And we actually do have our Ascend virtual kickoff that we're doing. Now that is completely online. It's a virtual, and there's going to be, we usually do prizes, giveaways, and we have great speakers. We've got a Nobel Prize winner speaking on this as well. And we do industry updates, great things going on in the market right now, different highlights. So you definitely don't want to miss that. As soon as we have the invitations, be on the lookout for that. And here is our social media. So I think we're at the end of this now. I think this is the quickest I've ever done it. But follow us on Facebook and LinkedIn to stay in touch with us. But as always, just give us a call at 800-255-5055 and visit our website because that's truly the best way to stay in touch. We always prefer a conversation rather than just emails. So definitely don't hesitate to reach out. So without further ado, I'm going to go ahead and pass the screen over to Sam. That way we can go over the exciting features of the #1 and immediate income payout here. So,
Awesome.
all
Thank
right.
you, Kat. And I will see if I can share my screen here.
Alrighty, you should have
All
access
right.
now, Sam. I just sent that over.
Okay. If you don't mind, can you confirm you can see my screen here?
Absolutely. Looks
All
good.
right, there we go. Well, first of all, I just want to start by thanking you, Kat, and everybody at IAMS for the partnership. We look forward to working with everybody here in 2026, and we're thrilled about the recent product launch that we had here at the beginning of this week. And a big thank you to all of you who are joining and taking time away from your day to be on this webinar this afternoon and learn more about IAMS and also the Talcott suite that we have. So my name's Sam Wiss. I'm sure I haven't had an opportunity to meet most of you, but I look forward to that. Just a very brief background on me. I joined Talcott in August. Prior to Talcott, I led sales and marketing at Life Innovators, a life insurance and annuity product development firm. And prior to that, I spent a majority of my career at an insurance carrier working as a wholesaler in the IMO and broker dealer channels. So located here in West Des Moines, Iowa, not too far from IAMS over in Omaha, and happy to serve as the relationship manager for IAMS with Talcott. So with that, I am going to go ahead and jump right into things. Happy to take questions as they come in or at the very end, whatever works best. But figured we'd spend our time talking about three things. First, just who is Talcott? I'll give you all a quick background on our company, our roots, and who we are. along with some of the key members of our leadership team. We'll also talk about our Assurance 10 product. That's one of our 3 products that we launched, and Assurance 10 is extremely competitive and guaranteed income right now. We'll cover how the product works, a case study of the benefits of leveraging an income rider, and also some of the differentiators and where we're most competitive. And then lastly, I just want to highlight our operational systems and kind of our tech stack that we're running on. We know service is really important when giving a new company a shot. And also some of the types of business that we'll accept. I know a lot of you are replacing and repositioning assets when that makes sense. So we could be a good home for some of those cases. And finally, the producer incentive that we'll be running throughout the year. So with that, jumping into Talcott, when we talk about Talcott, Talcott might be a newer name, but we often like to say that we're new, but we're not new. So we're a new entrant, but we don't like to think of ourselves as a startup. We recently entered back into the retail annuity market here with our product launch at the beginning of this month, but Talcott is actually built on over 100 years of experience, as we have roots back to Hartford Life, and Hartford Life was started in 1902. Hartford Life may be a name that you're more familiar with. Hartford Life in the early 2000s was the industry's #1 seller of variable annuities. So Hartford Life ended up getting out of the life and annuity business. They shed their life and annuity block. And in 2018, Talcott purchased that block. And that has helped us get to where we are now with $126 billion in assets under management. In 2021, Talcott was acquired by Sixth Street, who is a private equity firm with $120 billion in AUM themselves. And they are our strategic partners who they provide asset management expertise along with the capital to fuel our growth. So, all in all, annuities are not something new to us as an organization. At Talcott, we currently have over 500 employees, many of which are located in our headquarters in Hartford, Connecticut. And we have 1.2 million contracts on our books from either policies that we've issued in the past as Hartford Life, or that we currently reinsure from some of the industry's top names. So as you can see, we're new, but again, we're veterans in the annuity space. Excuse me. I kind of went through this timeline, but just to recap our history on the screen, again, Hartford Life originally founded and incorporated in 1902. In 1978, Hartford Life began selling financial products, including annuities. In the early 2000s, Hartford Life was the industry's #1 seller of VAs with annual sales of $15 billion. 2018, Talcott was spun off from Hartford Life, and in 2021, Talcott was acquired by Sixth Street. And so here we are in 2026, getting back into the retail annuity market. And that push is really being driven by a few prominent individuals that I'll talk about next. So our CEO is Imran Siddiqui. If you don't know Imran, he has a very rich history of growing life insurance and annuity companies throughout his career. Imran was actually part of the group and one of the driving forces at Apollo when Apollo founded Athene and grew it into the annuity giant that it is today. Ryan Lex, who I'll talk about here in a second, he and I had conversations about Imran and one of the big things that drew Ryan to Talcott. Ryan remembers when he was, Ryan worked at Athene as well. During his time at Athene, Imran actually wanted his compensation in Athene stock. That's how much he believed in what he was doing at Apollo. And he believed in his confidence and ability to build a great insurance company. And Imran is really looking to replicate that success, that same success here at Talcott. So, we're thrilled to have him at the helm. Our head of retail and leader of our sales team is Ryan Lex. Ryan has been around the IMO and independent distribution for a very long time. Prior to Talcott, Ryan was the chief distribution officer at Ibexus, and prior to that, he led the IMO channel at Athene. So, again, we're thrilled to have both Imran and Ryan at the helm leading the charge. So that's a brief history on Talcott. What I'd love to do next is talk through our Assurance 10 product, which is our guaranteed income FIA. Again, guaranteed income is an area where we want to be market leading, and we are market leading right out of the gate. But before we get into the product specs, I think it it helps to maybe just paint a bit of a backdrop on the need for guaranteed income right now. And you can see on this slide, for decades, Americans relied on defined benefit plans and pensions to really provide those guarantees and income for life. And during that time, the employer took on the burden of, hey, turning a savings into a paycheck for life. But over the last 30 years, there's really been a massive shift, and defined benefit plans are now few and far between, and defined contribution plans, you think of your IRAs, your 401ks, those have really taken their place. So you can actually see this here in this table when we look at the figures from 1975 to 2002. Defined benefit plans over that time have basically been halved, and defined contribution plans are up 263% over that same time period. So, retirees, your clients, they're essentially forced to become their own pension manager, and they have to, hopefully work with a financial professional like yourself to figure out and answer some big questions. What happens if the market tanks right near my retirement time frame? How much money can I spend and pull from my portfolio? And is this money going to last me, throughout my life and in my retirement? And those are really important questions. Those are big questions. And I think one of the best things that a client can do is, work with a financial professional and plan ahead and plan early, to turn, that uncertainty into certainty. And so I want to look through a quick case study here, and I think this really helps highlight, the importance of insurance products and guaranteed income. And we'll look at an example policy holder. His name is Jack. He's age 55. He has $100,000 earmarked for retirement. So, we're oversimplifying here, but Jack, he's looking at 4 different investment options over the next decade that, 10 years from now can provide him with a guaranteed income stream. So, purely for income purposes, what's the best way that Jack can maximize the amount of income that he's going to receive in retirement, and ultimately take on the least amount of risk? So on the slide here, there's different paths that he can take for the next 10 years. If he was really risk averse, he could invest in CDs, money markets, maybe MYGAs, and for our purposes here, we'll assume he does that, and he can earn roughly 5% on CD, money market, or MYGA. So after 10 years, his 100,000 grows to just under 163,000. Another option for Jack would be, maybe he's a little bit further out on the risk scale. He can use a 10-year growth FIA. We'll assume that over the life of that contract, he earns 7% per year, and that 100,000 grows to 196,713. Not too bad, right? He nearly doubled his money. But what if he wanted to take on full market risk and invest his entire $100,000 in the S&P? So the average total return of the S&P over the long haul is roughly 11%. We're talking total return here. So we'll be generous. We'll say his nest egg grows by that amount, and he ends up with 283,942. And lastly, instead of investing into one of those alternatives, he takes his $100,000 and puts it into Talcott's Assurance 10 FIA. Now, the income base or benefit base, not cash value, but income base, grows to 259,374, which is equivalent to a 10% compound interest roll up every year. So at first glance, you might think, oh, the best option for Jack here is the S&P 500. But I think there may be some things that are being overlooked. And I think the first thing is it's not an easy road to earn those returns, right? Jack would have to take on full market risk the entire time, and returns in the market are never smooth, and he's not guaranteed that 11%. He could very well hit a bad stretch of S&P returns. And to earn those long-term averages, clients and investors, they have to endure 2 to 3 corrections and at least 1 bear market per decade on average to earn those long-term averages. In fact, there's never been a 10-year period where the S&P had double-digit returns and there wasn't at least a 20% drawdown. So, our clients going to panic sell when they shouldn't. There's a lot of behavior risk there too. Are they going to have the stomach for the volatility and the up and down swings of that market? So, with Assurance 10, like I said, Jack is guaranteed that 10% return every year. But what we're after is income. So let's see Jack's options for income with these different options. So what we'll do is we'll use the 4% withdrawal rate rule of thumb for the non-insurance scenarios. So the 5% return would net Jack 6,500 annually, roughly. The 7% return scenario, that would net Jack 7869, and in the 11% full on S&P would net Jack 11,358. And with all three of those you're using the 4% withdrawal rate rule of thumb, those amounts are not guaranteed for life. But with Assurance 10, the age 65 payout factor with an income boost is actually 6%. So that would give Jack nearly $15,562 annually. And that amount, that 15,562, is guaranteed for life. So, I think this highlights the benefits of insurance when it comes to retirement income. Jack was able to take significantly less risk over that decade. He was able to generate more income, 37% more income to be exact, and he was able to guarantee that income stream for life with Assurance 10. So, again, not against clients having exposure to the market, full on market risk, but from a pure guaranteed income perspective, as you can see, our assurance solution is a great option for generating income in retirement. And with that, I want to jump into the actual product specs of Assurance 10. So Assurance 10, like I've mentioned, it is a 10-year duration. Issue ages are 40 to 85. There's a $25,000 minimum, $2 million maximum. We do qualified and non-qualified ownership. We take spousal inherited IRAs as well, and 10% free withdrawals beginning in year 2, along with a full death benefit that's equal to the account value. So with Assurance 10, we have 2 really distinct rider options, and that's really dependent upon your client's needs. And option 1 or option 2 will be elected at the time of contract issue. For option 1, this is really built for early activation of an income stream. So for early path, clients will receive a 20% income-based bonus at issue, and then a 4% compound interest roll-up every year for 10 years. There's no wait to turn on the income, no 6-month wait, 30-day wait, 1-year wait, anything like that. Somebody can activate it right away. And that's really one of the areas where we're most competitive. I'll show you a heat map here in a second that highlights our competitiveness, but immediate income is really where this product shines and where we're top of market right now. Option 2, our future path rider, is another area where we are top of market for guaranteed income, again, on a pure guaranteed basis. So with option 2, there's no income-based bonus. Instead, clients receive a 10% compound interest roll-up for 10 years, along with 5% in years 11 to 15. If a client defers until year 10 and beyond for activating an income stream, they get a 20% income-based boost. What does that mean? I'm sorry, a 20% income boost. What's that mean? Basically, you take their payout factor, whatever it is at that age, and multiply it by 120%. So again, we're extremely competitive in deferral years of 10 plus for a wide variety of ages that I'll show you here in a second. And on the topic of payout factors, for each path, whether it's option 1, early path for early income, or future path for later income, they each have their own set of payout factors. Each age varies. The payout factors aren't banded. They actually increase every single year. And we do single life and joint life payouts with a level payment option. It does not need to be decided whether or not a client or whether or not they want to do a single or joint payout. They can decide that at the time of income activation. So next, what we'll do is we'll take a look at the heat map. I've teased a little bit just to see how these riders stack up with the rest of the industry. So this heat map that you see on the screen, it includes nearly every product and rider that's in the marketplace currently. This shows Talcott's Assurance 10 product and the rank in each age and deferral period. So on the left-hand side of the screen, you have issue age, and then as you move to the right on the chart, that's the withdrawal delay for activating the rider. So again, for early path, we're currently top of, or very near the top of the market for immediate income. Again, a 0 delay scenario, really stretching from those late 50s to mid 70s. And even for 1 year deferrals, still fairly competitive there. For future path, we are extremely competitive and top of market in a wide swath of ages with 10-year deferrals and beyond, really from mid 50s to late 60s as far as issue ages go. So again, two different sleeves, if you will: immediate income in 1 year deferrals, and then also deferrals of 10 years and beyond for competitiveness. So really good stuff there that we're excited about and excited to share. And that's all out on ARW. If you use ARW to run quotes and illustrations and things like that, you should see Talcott out there. A couple other details that I do want to touch on for the Assurance 10 product. First, the annual rider charge is 85 basis points or 0.85%, so less than 1%. It is based on the income benefit base, but I think at 0.85%, relatively low cost compared to some of the other riders in the industry. And also, there is an enhanced income benefit. The enhanced income benefit is actually ADL driven. It's an ADL driven doubler. If one of your clients is unable to perform 2 of 6 ADLs, things like eating, bathing, dressing, things like that, their income amount can double for a period of up to 5 years or until the contract value hits zero. There's a 1 year wait for this feature to be available. I know some of the other doublers that are out there, there can be a 2 or 3 year wait, only a 1 year wait for this doubler. And then also, I know with income oriented products, rates can sort of be an afterthought, but we do have the S&P 500 along with 3 custom indices, and you can see the rates here on the screen. You know, again, the S&P, a fixed option, and 3 custom indices with all rates at 25,000 and above, highlighted by a 325 S&P 500 cap. And finally, some fairly standard, contract language and features: 10% free withdrawals beginning in year 2 and beyond. And also, there are nursing home and terminal illness waivers available at no additional cost. So that is our Assurance 10 product that we're really excited about. So, we talked about Talcott as a company. We talked about Assurance 10. I do want to just touch base on operations and suitability, and also our producer incentive, and just how we've strived to make doing business with us as easy as possible. So, at Talcott, we've really spent sort of the last 18 months really building and refining our tech stack and the systems that are sort of standard in the industry. And we think we found a really great offering with the current tech stack. So, from a licensing and contracting perspective, we use SuranceBay, SureLC. The product training is built directly into that. So as you're getting contracted with Talcott, you can take the product training as a part of that process for both, the MIGA and our 2 FIAs. Our illustration software is available via Firelight and Foresight, which is also the same as our e-application. We try to make everything electronic as possible, and all of that is built into the e-app in Firelight, and there's portability with the illustration software. Commissions are next day with batch processing. So we do daily issuances and we pay commissions daily. We have portals, agent, producer, financial professional, and customer portals, all available online. And those are all self-servicing, can be done. All of our forms are out there, ways to monitor your book of business, set up alerts, all of those things. So again, trying to make things as easy as possible to do business with. And I think one of the other things that I like to mention and highlight is, at Talcott, we have 500 employees, and for our ops team, we have an average tenure of 13 years for each individual on our ops team. So just, again, a ton of experience. But, ultimately, like I mentioned, we want to be very easy to do business with, get policies issued faster, reduce NIGOs as much as we can, get you all paid faster, and just allow everything to be done electronically and as seamlessly as possible. One other thing that we've done is our suitability process within Firelight has been automated really as much as humanly possible. So that should make things easy as well. And I know there's a lot of, replacement activity going on right now, just with, an interest rate environment that we were in previously that was much lower where we are today. And, our products and offerings have much better benefits than were available back then. So a lot of replacement business happening. We do have our suitability guidelines published that you can reference as far as, the type of business we'll look at and accept. But I do want to just highlight very, very quickly the kind of, I guess, top of mind suitability guidelines, if you will. We will look at contracts that are at least 2 years old as far as replacements go. Um, the max surrender loss, if there is a surrender loss on a policy that we will go to, is 7% if you're doing like accumulation to accumulation type business. However, I know we're talking about income today. So for income rider to income rider replacements on contracts, if Talcott's income and guaranteed income beats the replacing carrier's guaranteed income, we will typically take it with up to a 7% net loss on the account value, as long as we beat the guaranteed income from the replacing carrier. We have looked at situations where Talcott's guaranteed income beats the other carrier's guaranteed income by a significant amount, and the loss to the account value was above 7%. So we will look at those again. Work with Kat and your IAMS team to run those by us, but we can certainly get sort of pre-suitability checks on cases like that too. So yeah, again, our suitability guidelines are published. They're out there. If you have any questions on that, please feel free to reach out to me. But again, just wanted to cover kind of at a high level on an income oriented basis what we'll look at and accept. And lastly, we understand nearly all carriers, are really offering the ability for you all as producers to earn above and beyond, street compensation, and we want to reward that loyalty as well. So the producer incentive that you see on the screen is live now, and it runs through the end of December 2026. So the first tier begins at $2 million in issued premium, and it maxes out at $10 million, where you all as producers and financial professionals can earn an additional 150 on FIA business, and all of those bonuses and additional compensation is paid retroactive to $1. So we can get you copies of this incentive as well. But again, wanted to mention it as again, an additional reward for you and your loyalty to Talcott. So with that, I know we've run through a lot. I just want to thank you all again. Thank you to Kat. Thank you to IAMS for having us on. My contact information, along with my internal Stephanie Joyce, is on the screen. Should you have any questions and want to reach out directly to us as well, feel free to. But happy to take any questions whatsoever, if any have come through on the chat. And I will pass it back over to you, Kat.
Thank you so much, Sam. That was a very high level overview. Love the fact that you also went over operations and suitability a little bit. That is definitely a testament to how easy it will be doing business with you guys. And so far, you've been very responsive um, as a contact too. And so, sometimes that's the biggest thing when you're trying to get cases issued, guys, where you're trying to get things across the board. You don't want to keep clients waiting too long. They've been so quick about everything. So we're really thankful to have them as a partner. I don't see anything in the question box or in the chat box, but I have been working on a bunch of different cases, Sam. And so right before this call, I know I asked you about spousal continuation. I don't know if you had gotten anything back yet.
We do allow spousal continuation. So yes,
Good.
absolutely. That is the type of business we'll accept. So yeah, qualified, non-qualified. We'll do inherited IRAs if they're spousal as well. And I think one other thing that I didn't mention, we do non-qual stretches as well. So I know there's not a ton of
Yeah.
carriers that
Wow.
do non-qual stretches, might not come across that type of business very often, but it is also something that we will take and accept.
That is huge. So there really aren't a lot of carriers that do non-call searches, and you guys are an A minus rated carrier. So that's great. You guys have that A rating on you. And I don't think we knew that either. And you guys have the spousal continuation. That really was the question. And so, you guys very, very responsive. There might have been one question. Oh, I do have one question available in California.
No,
I,
no. Yeah, I think we just had Florida approved recently. So
yes.
California and New York are the only two states where we are not currently available, but 48 states. California, and I know is always just very, very tough to get new products and new companies issued. So I think, Kat, I think if I remember right, you asked me this the other day, California and
I
where we are on
did.
that.
I did
Unfortunately,
ask
I
you.
don't have a firm ETA on California quite yet, but we will certainly let everybody know, when that comes, because we know that's a big state to have.
Yeah, absolutely. Thank you for asking that, Tony. Tony's actually one of my agents, so thank you for taking the time to be on here, Tony. Um, but they are available in Utah. Remember, 48 states.
That's right.
So he might have some Utah stuff coming in, but um, I don't see any other questions. And of course, as always, you guys are available to give us a call. We'll pick up. We'll answer fairly quickly. And then Sam is also very responsive. So they're number one in immediate income, A minus rated carrier, 85 basis points. They really do check everything off when it comes to a beneficial carrier and product for the client when it comes from an income standpoint. And even on 10-year deferral, based off of that heat map, it looks really good too.
Absolutely. Yep.
All right. Well, I appreciate your time, Sam. Thank you so much for joining us. Oh, I did so sorry. I always have some
No.
poll questions, so I did want to launch one poll. Are you appointed with Talcott Financial? So go ahead and answer. I will leave that up there for a second. The majority are answering no, getting a bunch of responses right now. So yeah, it is 100% no, and that is because, they just launched, but it will be a very, very, I think, successful year for Talcott and for IAMS as a partner. All
Thank you
righty,
so
well,
much for having me on, Kat, and doing this and putting this together. And to everyone who joined, thank you so much. I look forward to working with you all.
all righty. Take care, guys.
All
Bye-bye.
right. Thanks all.